Mic check, screen share check, please. Alrighty, just a quick flashcard for you. This weekend's lesson in creativity, we were taking a look at clearing mental clutter, this mental minimalism, and walking meditations. And so posted some artifacts for the team in the creativity course and the meditation course and the foundations course on that subject. And I wanted to share this one with you as well. One for the boys. Okay, that's... Is that the 30-minute? Yeah, that's the 30-minute. All right, let's take a quick look at the simplified daily today. And we had another day today, like we had yesterday and the day before, which is that rising lows, rising highs, a positive close at 429. And all signs point to yes. The next resistance checkpoint is at about 440, which comes from way back, about 3 months ago, some resistance. So we're still well off this bottom of around 370. That's still the 30-day low here. This is the 150-day low. Here's the 10-day, the 5-day, and then today's low. And that's today's range, which was a pretty small range. So just quietly grinding upward. PSAR marching north, Dragon marching north, RL30 and the 10 both marching north. Everything looks good. Still in sideways market. This is the 30-minute version of that. So now what we're looking at is the 5-day look back. And here's the 10-day look back. And here's the 1-day look back. Basically today. Here's where we closed. Basically in the middle, about in the middle of that range. The PSAR got tested with price, but not with the RL10 didn't breach, and so this is still an unbroken stretch. But I will say that those two tests are the first time that we've tested that much since it flipped. Like these other pushes did not get through the PSAR. So this was a sign of an ever so slightening weakening today on a Tuesday, and the MACD histogram is in neutral. These are the two previous resistance levels from, this was the previous peak of the RL30 on the daily, and this was the dragon hump on the 30. So we're still well above that, but to me, I think you want to have a stop right here about 427. That's how much wiggle room I would give this. Basically the low of the day. I want to preserve all of this as mine. I'm willing to give it, that much wiggle room. Take a look at the sectors next. The S&P was up a fraction today at 0.2. Treasuries were up 0.4 at about 116. Diamonds were the strongest, up 0.7. Then weakness here on these are the growth or the speculative risk on assets. And basically emerging markets and the Russell were flat. The Q was down a fraction at minus 0.23. So this was a quiet day, no follow through. So we want to see where the weakness was first to see what we need to be on guard against tomorrow. There's quite a bit that was worse than the S&P today. So let's take a look at the sectors first. So the S&P at 0.2, Mexico 0.08. Then here's the cut line between winners and losers. Aussie dollar and oil exploration basically flat. Bitcoin and energy minus 0.2. The first real cluster here. Tech, precious metals, Ethereum, U.S. real estate, Brazil and the FANGs between 0.26 and minus 0.68. The VIX off 0.9. So that's still a favorable indicator for tomorrow, the fact that they were not paying a premium for insurance. Then there is lithium, blended commodities, blockchain, and agriculture to 1.5. Agriculture still holding above the key price level of 20. Then this cluster of oil, clean energy off 2.25, 2.5. Biotech 2.6. ARC Innovation and ARC Genomics, so both ARCs were weak. And then blended large cap crypto and global future of finance. So mostly energy and the disruptors, everything down in that area. And the tech weakness is noticeable too. All right, to the upside. Oh, I forgot to mention Tesla here. Off 0.9, still above the key price level of 900. So that looks like some regulation profit taking there. Nothing to worry about if you're a Tesla owner. So the S&P at plus 0.2. Here is materials and the two lumbers between 0.56 and 0.65. Then we have this cluster, conventional finance, marijuana, consumer discretionary, commercial real estate, consumer staples, 1.1 to 0.73. Now the individual targets, here's Alcoa, Cliff, and U.S. Steel. Once again, the metals all moving in tandem. And anytime the metals are better than materials, XLB, that's a good sign. So when this is good, but these are great, that's good. That's real good. Rivian up 2.5. It's still got a lot of ground to make up compared to Tesla. PayPal 0.56. Devon Energy basically flat. Apple and Microsoft underperforming the market, but slightly better than tech. Apple is in slightly better position. All right. All right, so to the daily. What in the world? Well, that's not good. We're going to skip that. We'll do that when we do the sniper train. Something wrong in my print setting here. Sorry about that. Distorting my colors. Sideways quiet. Still strong on all the indicators, especially the 10 and the 30. So we gave back a little strength today, but we're still strong long term, so that's all good. Risk on is abnormally good, so we're starting to get just a little overheated. The S&P is the only one that's really a worry right now for being overheated. The Min Pains, Walgreens, Visa, United Health, Coke, and McDonald's, so that's staples in conventional finance. The Max Pains still Alcoa, ExxonMobil, and Chevron. Tesla still in max pain condition. In the Dow Tactical, there's still quite a few symbols that are on the overreaction short dead cat bounce warning. Handful of dojis. Only Johnson & Johnson testing out on the 10-day auto framer. Lots of strength here in all of the breakouts. I'm not going to itemize them all, but it is worth noting that McDonald's is just continuing to lead the way. It made a breakout on the 6-month box as well. Home Depot looking really strong in here with a 173 on the 10-day. Home Depot looking good. Walmart having a nice recovery play too. Ken H had that as a value play over the weekend, and that trade is paying off. In the ETFs, lots of big breakouts. Diamonds, mid caps, the S&P, finance and industrials. Very strong move in utilities continuing, and a nice move in XLY staple or discretionary. So strong moves across the board. Centered on the U.S., we should say. Auto framer, just 4. Treasuries and Johnson & Johnson are the ones that get my attention. On the pinches, just a handful here. Microsoft and Chevron, Goldman and Alcoa. And I love McDonald's. If you can get that on a pinch, it's been having such a nice breakout. But it did not have huge volatility today. So to me, McDonald's is a compelling story to get after on a swing trade. In the Sniper Central here, no Godzillas because we've come so far off the swing lows. Lots of S&P fireworks though. Things pushing their the upper limits on their look back ranges, and still mostly quiet. Only a handful are not even exceptionally quiet. So that's how absent volatility is from this market. And you can see even on the ultra quiet ones in the S&P, none of them have exceptional one-day volatility. So that tells you what kind of day it was. A couple of fence sitters here. I think that's Pulte Homes. So here's one that sticks out for me among the most volatile right off the bat. Super volatile on both. So those are live movers, like Lowe's hardware. And so WHR and Home Depot, especially interesting because they had large one-day moves, but it hasn't triggered the 5-day volatility to follow suit. So these are like early in the breakout is how I would look at those two symbols as potential. Okay. Here's your Sniper auto framer data for the tactical symbol set. And the Sniper stats for the tactical symbol set as well. And you can see that we're being dominated by the summer in the 4 seasons. Looking at the NDXs, again, McDonald's coming as no surprise. Just strong and exceptional by every measure. Home Depot not far behind, and so is Walmart looking good. Coke is looking good. And even IBM is making a nice recovery. It actually has a little more room to gain because it's just in the white right there. Apple is winning the battle against Microsoft, even though Microsoft looks pretty good. Apple seems to be winning right now. And then in the ETFs, this is all U.S. sectors here are crushing it. And here's all your internationals. You can see that they got a lot more ground to make up. And some of them did not follow through today. So this is a U.S.-led market. That's everything I want to look at on the daily. Let's look at the sniper trades. All right, so this one is, here's the opening. Here's your opening range 3 minute. We have a downward spiral, so I'd really want to get short right in here. I could persuade myself to get short here with a tight wrist box. That's your choice. What I did was got long first on this one. I remember now. This is the S&P. This bottomed out, moved up through the PSAR, so I took this one long with a standard risk, and then took the -1 hit immediately, stopped and reversed, got short like I'm supposed to. Covered for a fractional. So fractional gain. And then here's the stop and reverse long again. And now the standard risk box. Standard exit on the PSAR. So there's 1 unit of risk. So 1, 2. So this is +2. This one was -1. That one pays for commission. So we're net +1. Whoops, net +1 right now. Caught a 2. Standard risk. Another 1. 1 risk, 1 reward, so now we're at +2. Our stop and reverse was, that's standard risk there. This is about +2. And then standard caught a 2 for another +1. So that's about +5 for the day in the market. You got some, here's 2 legs up in the S&P, 1 leg down, 1 leg up. And that's just the market itself. The S&P with a dollar risk on ES. Very tradable. Even though it wasn't a large range day. Here's a quick study in, let's see, where is it? Is it this one? Yeah. So this is Rivian, and I wanted to demonstrate that 3-minute, 30-minute technique that we talked about yesterday. So this is the 30-minute chart in Rivian. Rivian on the 30s. So these are all that's the 5-day look back here, and that's the 10-day look back there. So what I'm doing on this, when this thing bottoms out, I'm drawing this box between the PSAR. This is where the PSAR is, and that's where the bottom of the RL10 is. That's where the PSAR is going to draw if and when this thing flips. So if this thing comes bolting up through here, then my signal to enter in the next bar would be like right here, and then that would be my standard risk, right? So I want you to see that you can use the 30-minute PSAR not only as a risk box on the threes, but also sort of as a reference point for a change in trend, in the same way that this one here went from a trend down to a trend up, and this one became a trend down. This one has the potential, for, when that flips, for being a trend up. Check or hold. So that 30-minute PSAR box. So now when I dial down to on TC2000, it keeps the previous box, but it just adjusts it for the the time frame. So that's the same box that we just saw. And here's the 3-minute PSAR flip. The gap down, it sells off. Technically could be short right here. That's a possible short. Would not have lost money on that short. Now, this is if we're just using our standard patterns now, then we could be thinking of this as that little RL10 wiggle and then the PSAR flip. That feels like an SSC to me. It's crossed the dragon. There's the marker for your dragon. And then standard risk would be here. And then if it gets above this piece, it gets interesting, right? Because it will have cleared the resistance. So this space between the entry and the place where that trend move is confirmed, I just think of this as the tactical space, and all I'm trying to do is not lose money in there. All I'm trying to do is get my risk out, somewhere up in there, about that price level, quarter of an R, so that I can lock in those gains. That's all I'm trying to do in the tactical space. Check or hold. So I get the fail right away. Basically -1. It gives me, it holds support at the PSAR, then breaks out above the, so I just get my same entry, same thing. Now if I'm trading the standard 3-minute patterns, then there's a Kata 2 entry right there. And then this is the breakout above, like the emerging dragon. This is the entry that is also above that 30-minute PSAR box. So let's just take a gander at this again. So had tried this one long, front running the crossing of that resistance bar. It failed, so I get out. It makes a higher low. That feels like a Kata 2. This one definitely feels like a Kata 2 because you got the higher. And then this one is based on the fact that it's found its way through this resistance zone. I love this one here in the middle because I still have some room that if this thing stalls right here, then I have a chance of making a little money. But this one should get through and then just go, which is what we want to see. But if it starts to fail in here, then I want to scratch. My trade on this one was this one, and then I just noticed those two, and I could think about a second position after it clears this hump. Standard exit, and again, this is a good exit no matter whether you took this entry or this entry or this entry. The reason I like this one is because I'm buying at the point of maximum uncertainty. If this thing fails one more time, I will go short. But if it doesn't fail, it has the longest path to get back to the resistance level, which is all it did. So I get paid by taking the extra uncertainty and making that trade, which is about a 2R. Check or hold. And then this is already that RL10 wiggle and breaks the PSAR flip again right away. So I just re-enter and just think of that as a COTA 2. And up we go. And, standard risk would be like this. An extra +1. Missed the short, missed the long. I was fully satisfied with that meal, though. No, Mark. I mean, really, it's the second position is, if I would put two positions back on right away, I may do that 1 out of 100 times, and it's only on maybe a really bullish day and the best index that's working, and I've already made money in it, and it's still early enough in the day. That maybe 1 out of 100 times I do that. I almost wish I had never shown you guys that, because it is kind of rare for me to do that. And mostly I would rather get other positions working at 1 unit of risk on each one so that I don't have too much tension on any one load-bearing member at a given time. All right, so this one is Devon Energy. Here's the OR3. And all it's doing is monkeying around. I like that it is held and that the RL10 is still kind of facing up. So if this thing, which has now recovered to here, breaks out from here, I'm definitely going to be long, not later than there. Oops, wrong one. So long, and then a quick 1R loss. Stop and reverse. Energy sector massively volatile. So that's 1, 2. So +3 on this one, -1 on that one. We're about +2 net so far. And then this one you can see is going to be a stop and reverse, because that feels like a COTA 2 already, because the RL10 is bounced. And here's going to be that standard risk box. For about 1R. And that was good for the day. Treasuries. Here was yesterday's close. Here was the gap down. The OR3 right in here. And it breaks down again, so it gets short, with standard risk. Solid exit for about 2R. 1, 2. This gives us that low, breaks through the dragon, takes out the declining PSAR. That's an SSC all day. Boy, that was 2 the hard way. Caught a 2. Micro. And just not much else happening. All it did was kind of today. That's where it closed yesterday. That's where it closed today. Fell off the cliff and then spent the rest of the day climbing out of the basement. So tomorrow this sets up for another nice tight range breakout in either direction once again for continuation pattern. This is U.S. Steel. Here was the OR3. This opened here, ran all the way up and then back, then opened and then collapsed through the low. So I'm short here with 1 unit of risk right there. This thing, peels off and comes down to the PSAR. So by that time, I should have my stop should be down to about here so that I can lock in this gain. And now we're just going to wonder, see what's it going to do. Is it going to violate below this? Or is it going to hold support here and start to recover? Which way is it going to go? I don't know. Science project. Monkeys around and gets a micro gain. That's now an SSC long. 1R. Caught a 2. Fractional. And then not much other follow through. So U.S. Steel was one of the, along with the other metals, was one of the better performers for today. But it really did not have a huge up day. But even so, that little bit right there is still better than most of the things in our tactical stack. So, don't complain. I'm not going to complain too much on that. All right, so this was a note from Gary. He did a nice job today writing up his kind of his mind state. All right, so today he's using automated stops, so he only had to manage the stops rather than coming up with strategies each and every time, and that reduced the stress on his monkey brain. That's a good thing. And his attention span was spent on other things like email and real estate. So it kept his monkey mind occupied with other things so that he could give the mission essential attention, but not more than that, to the trades. So that's pretty good work. He started using flat boxes or short lines to locate the stop so that he had a visual trigger for his stops. and he could estimate what was going on. He reduced position size so that his anxiety per trade was reduced, because he had noticed that he had been living and dying by the scoreboard, and that was interfering with routine operations. So the combination of auto stops and managing them visually helped him take his eyes off the scoreboard. By changing his approach there to the workspace like that, it was reducing early exits and over trading, so fewer decisions, better performance, less fatigue. He turned off the podcasts, but still kept himself busy a little bit with emails and reviewing real estate box. So he was able to just manage the strategy rules, and the score takes care of itself. So I think he's on to something really useful here. Here were his trades for the day. Let's take a quick look. Excuse me. U.S. Steel today total, I think, was about an R. He gets the short position from here, ends up exiting, I think, there, and then gets this position in here and that position for a net positive of 1. This was tough sledding through here in U.S. Steel. Notice how useful the PSAR flip as a change of trend from down to up really is. We're, to quote the great Australian, trust the PSAR. Devon Energy brings in 2.7. Gets an initial, tries the initial long. That's the same one that I got -1 on, and the stop and reverse crushes it. And then he gets another nice fractional out of this one from here to there. Good work. Excuse me. Then Brazil basically breaks even, has a quick 1 hour loss, gets a +2, and then a 1 hour loss to net 0 on Brazil. Brazil just didn't have much move in there at all. If you are ever going to play a second position, this downward, this lower highs and lower lows, that makes this a collapsing dragon. And then when you see that kind of a spike and it starts, you could be out there on 2 positions and be very happy. So nice work from Gary. Let's see the team. Tired. Constantine is adding some. This is his management dashboard for his for that prop trader that he passed the test for and is working on. So these are the pieces of his dashboard. You know, picking various time frames to work with, indicators and sniper entries. He's primarily using the sniper, although he does have these other ones queued up ready to fire. So the management dashboard is useful. Agnieszka, our intern. Boy, she just, she doesn't say much. But trading on the 15-minute chart, the Kiwi dollar, she sees it roll over, breaks down, gets paid 0.6, has a COTA 2 entry, or no, I guess COTA 2 entry here, that I think is a scratch. And then she gets first short, second short, exiting a couple there for 7, and then gets one more piece when it breaks out of the congestion, and out of the Z3 pinch in the direction of the trend. Bringing home 9 like a boss. And here she's working the euro dollar on an hourly charts. Sideways compression, has a collapsing dragon entry. We might have put a second one here, especially after it rejects the edge of the dragon. I might have gone right here. She gets her second entry here and covers and brings home another 3. So that was a 13-hour day on slow Forex trading. I like a boss. Luke, I don't know when the last time we saw Luke have a losing day, so he's human after all. And what he's showing here is that I think he wants me to comment on this one to talk about the cost of being late. All right, so on this trade here, which is a minus 0.7, here's the PSAR flip. Either one of those is a proper entry. And if you're in there that long, you could reasonably expect to scratch or take a minus 0.2. So the cost of being late there was minus 0.5. Entering here instead of here, about 3 or 4 bars late. On this one, the PSAR gets hit here. He enters here, and so that is a scratch instead of about a 0.2. And then the Z3 excursion given back that much. So I'm gonna penalize a minus 0.3 for that and minus 0.2 for being late. So that's minus 0.5. This one, this exit and then a reentry, that's not a problem. The exit should be here, not here. And then this is where the short should be rather than here. So if I get short here and I still take this exit, then this trade should be about a minus 0.5. So that cost about 0.5. And then this one, instead of getting short here, should have been short from here. So I'm not going to lose 0.8. So that's minus 0.8. This entry should be here at the PSAR flip. It got that far in our favor and it came all the way back to here. So my belief is that should probably scratch. So instead of 0.8, I'm going to penalize them 0.5. This is where the PSAR flip happens. So that's the short rather than here. And so that should scratch instead of losing 0.8. And then this one should be entering here rather than here. So he's about 2 bars late or gaining confirmation. And then these two horns outside the Z3, I'd like to see you get out here and not endure all this, especially after then getting to experience that and then giving it all the way back to here. I would like to see on those is if you can, if you see this thing gets outside the Z3 and comes back, opens and goes outside the Z3, instantly put your stop below the close and the open in there, because that feels like it's always a support level. And then when those fail, it monkeys around for a while, so you might as well just take that. And instead of gaining 0.4, we might have picked up another 0.3. So when I total all that up, that's about 3.5 R in timing. Now, interestingly, this one shows same time frame, but on 5-minute bars, and now he's crushing it. the 5-minute Aussie. The breakdown out. There's his little consolidation, or it starts to break out. He gets it here before it even gets to the PSAR. This was a little late again. I'd still would rather see that here, but in this case it didn't punish him too much. So that's the difference between 3-minute and 5-minute. Maybe the 5-minute is the right answer. So points to ponder. That's everything we got for today, and we'll get this published and posted. Keep up the nice work.